Ares Capital just reported second quarter results, and the story is one of stability underneath some noise. Core earnings came in at 47 cents, matching estimates, while net investment income held firm. GAAP numbers looked weaker because of unrealized losses, but the income engine that pays the dividend stayed intact. For a business development company, that distinction matters. Let's break down what actually moved the needle this quarter. Total investment income reached $768 million, up 3.1% from a year ago, though it came in just under the consensus estimate. Net investment income was $359 million, or 50 cents per share, slightly higher than the prior year period. Core earnings per share came in at 47 cents, matching the street and down modestly from 50 cents a year earlier. GAAP net income told a different story. $171 million, or 24 cents per share, down sharply from $361 million, or 52 cents last year. The drop was driven by $183 million in net unrealized losses and a small realized loss. In short, the recurring income that supports the dividend remained solid, while mark-to-market swings pressured the bottom line. At quarter end, the portfolio stood at $29.3 billion in fair value across 619 companies. Net asset value per share was $19.35, down from $19.94 at year-end and $19.59 in the prior quarter. Credit metrics stayed healthy. Non-accruals remained low by historical standards. The portfolio continued to show solid underlying performance, with weighted average last 12-month organic EBITDA growth around 8%. Roughly 71% of the portfolio was in floating rate securities. Management emphasized that the majority of the NAV decline came from market-driven marks rather than fundamental credit deterioration. The income-producing power of the book remains the core story. Ares originated roughly $2.6 billion in new investment commitments during the quarter, with 68% going into first-lien senior secured loans. Spreads and fees on new deals improved versus late 2025. On the balance sheet side, net debt to equity sat at 1.12 times. Liquidity remained strong at approximately $6 billion of available capacity after repaying $1 billion in unsecured notes. The company also put in place a new $1 billion commercial paper program expected to lower funding costs. Management continues to emphasize selectivity and the advantages of scale in a slower transaction environment. The balance sheet looks flexible and ready for opportunities as activity picks up. The board declared a third quarter dividend of 48 cents per share, payable at the end of September. That marks the 68th consecutive quarter of a stable or increasing regular dividend. Core earnings of 47 cents sat just under the dividend this quarter, but the company carries significant taxable spillover income of roughly $988 million, or about $1.38 per share. That buffer continues to support the payout. For income-focused investors, the dividend track record and spillover remain key points of the story. Management described the second quarter as a slower transaction environment, but noted improving deal terms in the solid backlog. They remain selective, leaning on scale and long-term borrower relationships. Liquidity is ample, leverage is conservative, and funding costs are expected to improve with the new commercial paper program. The message is one of disciplined capital deployment rather than aggressive growth at any price. Core earnings power appears stable, and the dividend looks well supported by both current income and spillover. Investors will be watching whether origination volume picks up in the second half and whether unrealized marks stabilize. The bull case for Ares Capital rests on consistent core earnings, a long dividend track record, and a flexible balance sheet. The bear case centers on softer GAAP results from unrealized losses and a still subdued deal environment. I've been building a position in ARCC since late February and currently hold just over 268 shares, with an average cost around $18.77. The position is already showing a solid total gain, driven mostly by dividends, and I'm very happy and confident continuing to hold it for the income. This video is for informational and educational purposes only. It is not financial advice. Always consult a licensed financial advisor before making any investment decisions. If you found the breakdown useful, consider subscribing for more earnings coverage.